It was a little, almost a doji candle. The gap held strong, and the bulls ended up continuing. And so again, this is where all of your analysis starts to come together. Gap theory says as long as the gap does not fill, the bullish trend would still be in effect because it was a bullish gap. Well, even though the early reversal candlestick said dark cloud cover, it's a good chance it's going down, that gap never filled. The moving averages still said it was a bullish trend. It turned out it was still a bullish trend. And so you've really got to put all of your analysis together to get a complete analysis at the end of the day. But what we're doing here, and the reason it kind of feels like you're piecing it together, is that's what we're doing. We're literally piecing it together. We're going piece by piece. And so in and of itself, the candlestick might have told you it was going down, but that doesn't necessarily mean it trumps everything. Take a look over here. I want to show you this little candle formation in the bottom of May. Notice what happened here. We actually had a morning star reversal, but it was a little bit ugly. We did not get the gap on the first side. So from a pure technical standpoint, no, we did not qualify to be a morning star reversal. But look at the formation. Look at the intention behind that move, and it was obvious what was happening. That was a morning star formation. Long bearish swing here. Ultimately, if you come back to the beginning of April, that whole move was about $100. If you just came from this move right here at the end of April, it was still a good substantial move of about $80 from 610 down to 530. We ended that with a high wave spinning top. You see that? So we ended it with a high wave spinning top, and that high wave spinning top was inside the preceding black candle. Now that 2-day formation looks like what formation that we talked about tonight? That 2-day formation looks a lot like the harami, the bullish harami. Thank you. Looks a lot like the bullish harami. The only thing is that that spinning top is black instead of white. That's okay. In full context, you watch it one more day. What happened the next day? The bulls came back in, and you say, wow, together, this 3-day formation looks a heck of a lot like a morning star. Now, is it textbook? No, it's not textbook. But guys, you got to get beyond the textbook. Realize trading is not a science. Trading is a little bit more of an art. And when you've got everything that looks extremely close, and you've got the right sentiment, and was the right sentiment being portrayed? Yes. After a bearish swing, we had one little, what we call a throw off here, or exhaustion move, strong bearish move, a lot of indecision, strong bullish move behind it. Even though it didn't form the perfect morning star pattern, the sentiment was there to suggest the morning star. And yes, it ended up working out just perfectly. Does that make sense? All right. Now, of course, as you look at that, that was in May. Where did Apple go? Well, ultimately, the last couple of days, we're back up to 670 here. That was the turning point right there. So yes, candlesticks are very often the ultimate turning point. Very, very often the ultimate turning point. Not always, but very often they are. If I were to just zoom out here, watch what's going to happen. I'm going to just roll through this Apple trade, and I'm going to hit every turning point, and I'm going to show you how every turning point has some sort of a reversal pattern that's formed in here. And, you know, I can do this for any stock. It's really quite fascinating the way these things work. Look at this one right over in through here. We had started the, I'm just going to randomly pick up here. We had the swing, the bullish swing up here. We ended up with a bearish engulfing pattern, had a really small swing down, had a long lower shadow here for this white candle. Bullishness continued. We ended up having bullishness out of this day, that black candle, but you notice the lower shadow, even though it was a black candle, that lower shadow was still suggesting that there was a lot of buying pressure. And so you can really interpret a lot of data from these shadows because it was a pretty good size lower shadow. Then as you watch the trade continue, we got up here, we had a bearish dark cloud cover that came in here to attack this. The next day, we had the small, almost a doji, did not close the gap. That justified the bullishness continuing in here. Look at this little sandwich, almost a rising 3. Now that first candle was not as strong as I would like for it to have been, and the third candle traded below the first candle. So from a textbook standpoint, it's not a rising 3, but you see that basic formation, that general sentiment. And, of course, the next day it continued. Now, one thing I will throw out here as well. Watch what happens if I go one more day on this formation. Look at this. The first 2 days were bullish. 1, 2, 3 days did not close below the first day, and then we had that, in this case, sixth day, I guess it was, where everything continued. Well, the way you would look at that is you can look at this and you can blend these two candles together and say the whole sentiment of those 2 days does shape up into a rising 3. So a lot of times when we're doing candle interpretation, we look at the whole picture of sentiment. And does that make sense? Sorty says, why is it a rising 3 when the candles are descending? Because the pattern is rising. It's a bullish continuation, and you got 3 down days in the middle. That's why. All right, as we got to the top up here, another dark cloud cover. The whole thing rolled over, ended up with a shooting star right there. We had one tweezer bottom, basically, just not quite exactly tweezer bottom, but very, very close there. That gave us a quick rebound. Didn't hold very long. The bearishness came in. We had a strong hammer with a long lower shadow. Very cute little spinning top there. And then this was the earnings data, if I recall. Was that earnings? I think that was earnings. I can't remember if that was earnings or not, why we had that gap up. I think that was the earnings date. Bearishness ensued. Again, we had the evening star, morning star reversal pattern there at the bottom here. We actually had some other chart patterns in here, like this flag pattern. I haven't talked about chart patterns. I've just been talking candles. As the trade got going again, watch what happened up here at the top. We had some bullishness coming in, but the bearish sentiment started to build with these spinning tops. You see how that spinning top came in there? Then we had spinning tops at the bottom as we were starting to establish more of a flat range there. And you see how we really ended up in some consolidation, shaking out the buyers and the sellers. Finally, the bullishness did break out here. Up here at the very top, another dark cloud cover. It stopped the momentum. We didn't get a full-on reversal. We had 2 days of reversal. We didn't get a full-on reversal. Instead, we started to go sideways, and then we had one small gap down. That was the earnings date, I think. And then we ended that day there with the doji candle, bearish candle, and then a bullish. Look at that bullish engulfing pattern. Now watch what else happened in here. We got a gap here and here. So we have a very small, not a very big one, but a very small island reversal, which does suggest a lot more bullishness. The next day we had yet another gap here. That could be considered probably a breakaway gap. Either one of these could be called a breakaway gap. And then, of course, once we really broke out of the resistance here, see, now I'm kind of pulling some of your line analysis with your chart patterns. Got a little small flag or a pennant pattern in there. Once we got that breakout, we're off to the races until we got to the all-time high, which was the resistance. We pushed through it in 1 day. We really pushed through it 3 days ago. Got the dark cloud cover yesterday, and then today we're retesting that. We're back in that situation. There's a lot of bullish sentiment, but the bears are looking at their profits and they're saying, whew, that's done good. I think I want to take some of my money off the table, and they're liking that. The other thing that's happening up here, we've talked about a lot about this, about trader sentiment. The other thing that's happening is, tell me if you think this is true. Were there people that bought Apple up here at $645 a share, and then they held it as Apple sold off to $525? Were there people that did that? Were some of you people that did that? Okay, yeah. And then what happened? As the bullishness came back in, what are they thinking through 1, 2, 3, 4 months of holding this trade? They're thinking, good golly, if only I could get back to zero. Make me whole again, says DG. You're right. What happened over the last 3 days? Their wishes have been fulfilled. So there is a lot of selling pressure that is occurring in this location on Apple right now because they got burned as soon as they jumped in here at 625 or 650 back in April. Market sold off. In this case, Apple sold off drastically. A lot of people held through it, and they were just waiting to break even. That's one of the reasons you've got so much selling pressure that's happening in that location. Does that make sense? All right. Kathleen says, that's very interesting. You are correct. Ken says, on a Japanese chart, wouldn't that be reversed? Oh, I see. He's talking to a moderator. So I'm coming in the middle of a conversation. All right, let's come into Baidu. Baidu's got an interesting trade set up here. Let me just roll through a couple of these, and then I'm going to get to current times on Baidu. Get my lines off of here so that I can just talk in. No, I'll leave my lines on there. That's fine. Okay, rolling up here into resistance. Watch what happened. First thing that happened up here, strong bullish candle. Next day, this was a very long-legged doji, long upper shadow, kind of shooting star-esque. Obviously, it was a lot of selling pressure at this resistance of just over 150 here. And then the next day, we had a strong bearish candle in here. Okay, so the first two candles gave us essentially a bearish Harami cross pattern there. And then that third candle really gave us more of a bearish engulfing, even though technically bearish engulfing would normally have a little small white spinning top. If I see a bearish engulfing that's engulfing a doji candle like that, I'll go with it and still call it an engulfing pattern. So anyway, bottom line is we saw that stopped the bullish momentum. The bearishness came in for just a couple of days. We established some foundation as we traded back up into that same resistance, that same pivot area. Look at the strong bearish engulfing. By the way, look at how I had my trade set up, 153 or 143, bullish or bearish. We're not trying to trade inside there. We're trying to trade once it breaks out. Okay, well, that bearish engulfing came back in right there. We got a little small continuation pattern forming here. Had a breakaway bearish gap. Bearish breakaway gap. Gapped right over my 143 entry. There you have a pennant formation, and you guys can see what happened all the way through here. There's your tweezer bottom right there. Stopped the move, came back up, started to test this old level of support as a new resistance. Had one final push into support down here where we got another tweezer bottom, or I'm actually happy to call it a bullish engulfing as well. You can call it either one there because it does technically engulf. So we'll call it a BE. Bullish engulfing. And then as it traded back up, look at this long upper shadow, gravestone or tombstone doji right there on our resistance level. And then as we start to trade a couple sideways days here, bears come back in. There is the sandwich. Look at that. Let me highlight it here for you. There is that long bearish shadow or long bearish candle, several small days, and then there's the continuation. And boom, the bottom fell back out, traded down. There's another flag pattern right there, all the way down to the next bottom, which was just below 105. Got a long lower shadow on a strong hammer candlestick, followed by a bullish engulfing over the 2 days there. There's your bullish breakaway gap. There's your pennant. There's your stair step. We broke out last week. And this, I'm going to just confess to you guys the pain of this trade for me as we talk about this. This is a horrible story that I'm going to tell you right here because I was moaning and complaining about it in the office. That's how bad it was. So we broke out, new trigger at 133. I was just convinced this trade was running right up here at about 138. I just couldn't believe that it didn't do it immediately. And instead, what happened? 2 days ago, I got an evening star reversal. Okay, now understand that this was a perfect trade setup. I mean, all the moving averages said this trade was going up here to 138. We got all the chart patterns saying this trade's going to 138. We triggered the continuation at 133. Granted, I originally got in at 125, so, the trade wasn't a total loss, but my original trade was 125 up to just over 130, then re-entered up here at 133. And then what happened 2 days later, we got this evening star reversal. Well, I'm watching this, and I'm like, this is an evening star reversal. This thing could really burn me. And yet I discussed it in my mind and I said, well, I could also just be testing my old resistance as a new support here. So I set a stop right below this trade, right at the bottom of the day, but you won't believe what I did. I actually set it right before the end of the day. I set a day order. I screwed up my own trade. I set a day order instead of a good till cancel. The next day, when I came into the office, the trade was killing me. I ended up losing over 50% on that trade because my order had expired. I set a day order. Yes, I set the trade up right, and I still screwed it up. And so, screwed it all up. And yes, the point is, the evening star reversal was telling us the trade was shaking out. Had I just just trusted what I already knew. And see, I'm just confessing this to you guys to prove to you that I'm human and I screw things up more often than you want to know sometimes, right? So I knew it. I knew that this was a reversing trade. I talked myself out of it. I also can be emotional if you're not careful, right? Even though it was part of my trading plan, technically. So anyway, put my order in there. I messed up the order. I put a day order instead of a good till cancel. Next day, it was not there. You guys know what happened with Baidu yesterday. Sold off, back down to my support. Now watch what happened today. Today, we gapped down, and a lot of the day, we were actually starting to pierce in here. This is really a bullish counterattack at support. I'm watching this trade again. Now that we've had that small corrective move, watch this. I'm going to finish this trade setup for you. Okay? Watch what we can do now. Now that we've got this little corrective move, come back, look at your moving averages. Do the moving averages still support the trend? Well, yeah, they're still good. Moving averages have not screwed up. We've still got the bullish moving average crosses. We're just testing that 50 period. Looking at the 100 period is a little bit of a problem because these long-term averages technically have crossed into bearish territory, but they don't have any real slope to them, and we've not had a good slope for the last several months. So I'm not convinced that we've got a long-term reversal, so I'm kind of discounting those. If we came over and we looked at our oscillators, which I haven't taught you guys yet, but you will learn these. Did I teach you oscillators? No, I didn't teach you oscillators, did I? Once I teach you guys these, no, I know I haven't because I'm teaching in the next class. Never mind. Of course I haven't. You're going to learn about these stochastics. Stochastics are saying that we're going down, but this RSI signal gave us the full correction that we need. In fact, it even set up a bullish trend line on my RSI. So I'm saying that to justify that this trade could resume into its bullishness now that we've had that small correction in here. Stochastics would allow for that because when we get into a long-term trend, it gets overbought and it stays there for a while. If you know anything about your Bollinger Bands, then you know that we're not getting a solid signal there. So this is not a great trade setup, but I'm going to show you how you can set it back up. ADX has corrected a good bit here. Now watch this. If I zoom out, watch this. Long-term trend, and this is one of my real determining factors that I'm considering. That long-term trend line, I'm coming in contact with it right now. So as I zoom back in, that's what that red line is. As I zoom back in, what you can watch out for on this trade is, because I don't want to mess this up for Power Trader, we'll just add another one of these. We can put another trigger in here that's basically a little bit higher than today's high, about 124.78. And then tomorrow, if Baidu comes in and does something like this, I'm probably going to go back with the trade, even though I got burned on it a little bit. Why? Because I've seen this happen a lot. And my candlesticks were telling me this. My trend essentially was a bullish trend. I have no reason to think it's not a bullish trend. I still have my bullish breakaway gap. I got an evening star reversal. Remember, an evening star reversal, and none of these candle reversals actually, these candle reversals are not terminal patterns. They don't mean the trend's done. It just means that that swing was done. So that swing is corrected. Now at the bottom of that swing, I've got a bullish counterattack pattern. If I can get a little bit more confirmation here, basically on price action, I'll probably go back with this trade. Although, let me ask you, how many of you think that I'm going to be anxious to hold all the way to 138? I'm probably going to take a lot of my profit at 131, aren't I? Because I just got burned just a little bit. So you see, guys, how that's starting to all tie in together? Is that interesting? Excuse me. All right, let's see. I've done a lot of pattern recognition tonight. Let me take some questions. What kind of questions do you guys have at this point? What questions you got? Ben said you got in at 143. No, I did not get in at 143. I got in about actually just a little bit below 133, and I was hoping to take it to about 138. That was my target up here, but I ended up getting out like way down here. I mean, if I get back in tomorrow at 124, it'll be pretty much where I got out. I mean, I took a 50% loss, and I had a gain initially on the position. So those are very, very painful lessons. Very, very painful. I'm being raw and exposed and confessing to you that I'm not perfect. But guys, honestly, it's annoying, and I was a little grumpy about it yesterday because I was really convinced this was going to be a really good trade. And, sometimes those things just don't shake out, and you have to sleep it off and move on. And so, it happens. The stuff happens. It's just all there is to it. Let's see here. Moderators, nobody's flagging questions for me, so I'm not sure if there's any specific that I should hit. I'm just going to go straight to the bottom. Most of you are saying that it's nice to hear that I'm not perfect. Not that you ever should have thought I was perfect. Great. Okay. Polly says it's nice to see how I was thinking through it. And so that's good. All right. Puri says, can you go over FAS? I will look at FAS for you here since we're doing some analysis. Jody, let me hit Jody before I hit on FAS. Jody says, aren't the fast-moving averages pointing down, suggesting bearishness? Thanks for the question, Jody. This is back on Baidu. Short-term moving averages, Jody, understand what's happened here. They're not crossing down. Yes, they're coming down, but watch what happens here. You've got your bullish moving average crosses, and technically we've still had a good strong angle, or relatively good strong angle here. For the last day, 2 days, we've gone flat on that 50 period, but we're looking for an intermediate swing. So as I zoom back out, watch what happens on the big picture. And let me show you some stuff here, okay? On the big picture, Baidu for the last year, for a long time now, Baidu has been moving from essentially 105 to 110 up to about 150, back down to 115, up to 150, 160, back down, back up, way back down to 105, way back up. And in other words, what we've had is we have these big swings. Well, inside those big swings, we get little counter moves, Jody. So you see what I'm looking at is I'm thinking, I've been watching and trading Baidu for a long time now, for over a year. We've been having this on our top 10 list. And oftentimes what will happen is we'll get a good solid swing and then a very fast rebound, and then it continues. So I'm watching for this pattern. Realize that trading is, you start to feel the stock. One of the reasons we stick with 10, and I don't sit here and try to just scan and find all the various trades that are available in the market, is because as you trade a specific company for a long time, you get a vibe for how those traders feel and how they react. And every company is a little bit different, the people that follow those companies. So Jody, having traded Baidu a good bit here, that was my feeling. And no, there's no scientific analysis I can tell you for that, Jody. But what I can say is the way that I felt with Baidu is I'm not shocked to have that sudden jerky reaction. And yes, what will often happen is you get a crossover. The averages will look like they're heading down, but that 50 period will keep going up, and then the pattern ends up continuing, just like we had back here in March where I just circled for you. So look at what's happening here. Yes, the averages are coming down, but the 50 period is still coming up. So there's a divergence of the averages. This is more of a minor level correction at this point. Now, I may be wrong. It may not stay there. But at this point, it's more of a minor level correction than it is an intermediate level correction. So, Jody, this might be, and this is what I'm looking for, this could be the pullback that sets us up for the next big bullish move. And that next one, to be honest, I'm going to be a little bit scared when we get to 131, but odds are it's going to hit 137, 138, and there's a good chance it's going to go to 150. So what we'll probably do is scale in and out at different pivot areas. Does that make sense, Jody? Wow, lots of comments came in while I was talking there. All right. Well, let me... Yes, thank you. Gene says getting that feeling is why we do the back trading. No back trading, no experience to rely on. You are absolutely correct, Gene, totally. And in fact, guys, that's coming up here in just a couple weeks. We're getting into those classes very soon here. Let me hit on FAS for Puri. FAS was another good trade setup. It has not panned out super well at the moment, but I'm just going to keep it really simple based on what we've learned thus far. We've broken out. We had a trigger set up at 94.52. Yesterday, we had a shooting star coming in here. And today, we actually had a down close, down 38 cents, but we had a white candle. Now, people often say, how do you get a white candle with a down close? Well, it's simple. You had a higher close on the candle than you had open, but we had a lower close relative to yesterday's close. And so that's how we ended up with a down close, even though we had a white candle. Now, Puri, you tell me, based on what you've learned, should this trade still be good? And I'll let you guys all tell me. What do you guys think? Based on what you've learned so far, is this trade still a good trade? Yeah, probably. Sure. There's no reason to think that it's not. Volume is looking pretty decent thus far. We've got the breakout at 94.52. Very often after a breakout, we do come back and test. I do think we're probably beyond the testing point. I don't expect we'll come back and test. We might. I think you should set a stop in here, Puri, just right below that 10 period. You really want to, if you want to be really conservative about your capital, put it right below the 10 period right here. You want to be more conservative about not getting stopped out, put it down here below support and below your 20 period moving average. And that gives the trade plenty of room to come back, test support, and then continue. Could you guys imagine a scenario after this resistance breakout? Could you imagine a scenario where FAS would come back and then continue, and would this create a chart pattern? Of course, the answer is yes. That would create a bullish flag pattern. So Puri, it's a little too early to tell exactly what's going to happen with this trade. We have to react to the market as it happens. But at this point, the pattern and the momentum seems to be pretty good. Moving averages are still separating, getting stronger, going at a good angle. Next target's going to be somewhere up here in the 104 range. Although we do have a gap, and this explains the shooting star yesterday. We have a gap right here at $100. And so oftentimes with these gaps, what you'll have a shooting star like this that'll come in that first day. Momentum continues, and then we stall out right there. So I would keep $100 as a target, and then 104 is your main target there. Make sense, Puri? All right. Good. How many of you feel like things are starting to come together just a little bit? Still have a little bit more to look at, but it's starting to get there, right? Starting to get there. Mark says, would what happened today on SanDisk be considered a one white soldier? Let me pull up SanDisk for you. And the answer is no. Definitely not. Good question, though. Let's find some one white soldiers and see if I can't specify for you. What happened on SanDisk today is we had a shooting star yesterday, and then we had a continuation today. So I'm not sure how you got one white soldier. One white soldier is going to come after a little downswing, and you're going to gap up. Let's see if I got any on here. If not, we'll go find some one white soldiers marching off to war. There's one right there. All right, come over. I'm just gonna scoot this thing over so you really can specify what we're looking at here. And take a look over here. My scaling kind of got a little bit messed up when I did that. Let's see if I can't scale it. Nope, I want to scale it the other way. All right, that's close enough. All right, so notice what happened here, Mark. You see how we were in a downswing. We had a black candle at a support, and the next day it gapped up and closed above. My arrows don't look that great, but hopefully you see the idea there. So between that right there is a one white soldier. That's what I'm trying to show you. Yes, it was already in a trend and not, yeah, exactly. You got it, my friend. You got it. All right. Good question. Ryan says, is Amazon in a rest after battle today? Good question. So we'll go look at Amazon if I can get my chart to move. Excuse me. Sorry about that. Yeah, actually, no, it's not a rest after battle. Technically, it would be what other pattern, ladies and gentlemen? Actually, I was looking at this today. I forgot I was looking at that. Yeah, that is another type of a pattern that we talked about tonight. What would the pattern be? Let me get rid of all my annotations so that you can clearly see that formation. And you are correct. Whoever asked it, Ryan, you're very close. It's a rising 3. Thank you. For everybody who said rising 3, you're correct. And Ryan, let me just show you why it's a rising 3. Granted, the rising 3 is a variation of it's a very specific rest after battle. But look what happened here, Ryan. Long white candle, 3 small days, do not trade below the first day, and then we got a continuation. Now, I will throw out one thing, because obviously I've looked at a lot of these, and I've watched how the trading behavior behaves. What I want to show you is, number one, selling pressure is starting to show up. We're in the right location for selling pressure to show up because we're at resistance. And number 2, we've got a fairly good size upper shadow. So even though this is a rising 3, I would not expect it to rise much more than about 246 to 248, somewhere in there. So you don't have a whole lot of room left on that particular trade right there. My initial trigger was back here at 239. Turned out to be pretty good, it looks like. That was several weeks ago, though, that we set that, at least 2 or 3 weeks ago. And so, yeah, you're on your way there, Ryan, for sure. Does that make sense? It's not a bad location particularly. Gene says it's a bad location. But, Gene, it's not really a bad location as much as the move is running out of space. Okay, so I wouldn't call it a bad location. Location's right. It's still part of a trend, and you have that rising formation. But it doesn't have a lot more room to go. That's the bottom line. It's just not a whole lot more room to go. Now, we may get up to the top there, rest for a little bit, and have plenty of room to continue. I do want to show you this, though. This is interesting. The last day is not as big as I would like, but this is essentially a rest after battle as well. Because remember, the definition of rest after battle is one good-sized white day, several small days, 2 or more. Well, this qualifies. It's 2 or more. And then we concluded with a good-sized white day, breakout there. So, yeah, that also is a continuation. And you also notice that it looks a lot like a stair-step pattern in both of those cases. So you guys are getting the idea. And if I kept coming back here on Amazon, I could show you a bullish Harami cross. Here was a little pennant that did not play out like a pennant there. You can keep coming back here. And every one of these swings has some sort of a pattern pretty much. There's a bullish engulfing pattern. Keep coming back here a little bit more here. You got shooting stars that, slow down the move initially. This was a large consolidation format. So consolidations usually are not as neat and tidy sometimes with turning points as we like. But you still get the patterns in there. Are you guys starting to see how candlesticks help you zero in on details? Are you seeing how the candlesticks help you zero in on the details? And they're really, chart patterns are bigger picture. Candlesticks are very small picture. Let me show you a really good example here on the euro as you pull all of this together. Actually, I'm going to go with the dollar here. Okay, I got them all. Look at what happened on the dollar. And I'm only showing you this one because the pattern came to my mind. Notice what had happened. We've been in a good, solid, bullish trend here for several months. If you looked at your moving averages, they've obviously been in a good, solid move for several months. A few months ago, we got into a good consolidatory move, triangle. That triangle broke out bullish. Now, this was a descending, it was a symmetrical triangle. I drew it descending, but it was a symmetrical triangle. If you look at it, this right here. So symmetrical triangles, very 50-50. You never know which way they're going to break. This one broke out bullish. We had some flag patterns in here. We got to the top. Now, this is a Forex trade. So Forex, you're not going to have as many gaps unless it's over a weekend. Notice what happened at the top here. We had long upper shadows showing the trade was about to reverse back down. It did reverse back down. These minor level swings came back down into support, picked up that 50-period moving average, pushed up, came right back down, picked up that 50-period. You notice a lot of these don't have solid gaps. They're very small gaps, if any kind of gap in there. And as we got back up to the top, this thing started to roll over. Now, look what has occurred on this particular formation as I zoom out a little bit here, because I'm actually leading to a point here. Let me zoom back out. There we go. Change over here. All right, here's what I want to show you here. Notice that we're getting... Well, there's so many ways I can look at this. Let me show the smallest one. There's a head and shoulders pattern right there, okay? There's your neckline, and it finally broke out yesterday. Finally, it's been taking forever to break out. So there's there's one Head and Shoulders. Now watch this next thing I'm going to show you right here. This also is a Head and Shoulders, and I'm expecting there's a good chance. And let me scoot it over so I can show you better. This also, there's a left shoulder. This is probably a head. There's a good chance that this is going to bounce back up here before a bigger reversal would occur. Now, I don't know for sure if it's going to happen, but I'm anticipating that could happen. And watching that, what it does is it makes me very cautious as we approach this support level. Because as I'm looking at that support, I'm seeing that on a grander scale, yes, I had a small Head and Shoulders in here, but on a grander scale, I could have a bigger Head and Shoulders, but this is my neckline. So that's where I could be getting a bounce. Now, understanding that, let's zoom in. That's a bigger picture analysis for patterns. Let's go into the details now. As you look at these details of the patterns, look, those candlesticks that we've already talked about tonight, they shaped up just the same way. There's your sandwich from your large bearish candlesticks. See that bearish continuation formation? Here's a little bit of a flag stair-step type of a pattern that came into play here. There's your breakout. So everything shapes up the exact same way. Candlesticks are very day-to-day, 1, 2, 3, 4, 5 days worth of information. Chart patterns are a little bit bigger. Overall trend lines a little bit bigger. Moving averages, they're smoothing out the big picture trend. And of course, in looking at this, those moving averages are also telling us that, hey, we're starting to go bearish. So, the question really on the euro right now, the dollar, the real question is the trend reversal here, or are we going to see this shape up as a solid support, maybe get another bounce, possibly forming another shoulder before we can have a full-on reversal? But I do still contend that the dollar needs to have a big reversal. I contend that for a lot of reasons, which we'll actually discuss further later. What do you guys think? Comments? Thoughts? Interesting? All right, the ticker symbol for the dollar, this is actually, you have to understand, who was it that asked that? Alexis. First of all, the ticker symbol in Trade Navigator is $DX. This is the dollar index. There's not a specific dollar ticker symbol, Alexis. This is a dollar index, kind of like the Dow Jones is an index. And what the dollar index is it's a basket of currencies that trade against the dollar, including the euro against the dollar. So the euro is one of the ones that I like to trade. I like to trade the German pound and the Canadian dollar, all these against the U.S. dollar. And when you deal with currency, it's a little bit different, Alexis, because you're dealing with two different currencies. We call them currency pairs. So if I'm like in this particular case right here on the euro, and I showed you the dollar index because I accidentally erased all my euro lines, but there's the Head and Shoulders. This is an inverse Head and Shoulders, just broke out bullish here. On this particular case, in order to go short the dollar, I have to be long the euro. And so in this particular case, I'm buying euros, which allows you to be short a dollar. Now, if it's the opposite scenario, let's say it was the Canadian dollar against the US dollar. See if I can't pull this sucker up here. You know what? Rather than type it in, these currency tickers are always so awkward to me. I'll just go down here to the Canadian dollar. Now, in the opposite case with the Canadian dollar, the way that you profit on this move, Alexis, is because the U.S. dollar is the base currency. In order to, you go short the U.S. dollar and you're long the Canadian dollar. But the chart's going to appear upside down. So this is actually a picture of the U.S. dollar as it's tumbling against the Canadian dollar at the current moment, because the U.S. dollar is the currency base. Now, I realize that might be confusing for you guys because you haven't studied currencies yet, but that's the basic idea. So, Alexis, I can't tell you exactly how you buy, or there's not a specific ticker symbol for the dollar. That's what I'm trying to say. Now, Alexis, I can tell you this, and this might help you, Alexis. You might want to trade the ETF, and the ETF is, I believe it's U up. I never trade it, but I think it's U up. Yeah. U up, UUP, is the US dollar ETF. And that trades the dollar index, actually, UUP. And so that's essentially, it's going to gap a little bit because it's an ETF. I trade currency direct, so I don't actually trade the ETF for the currency. But you could manage to trade the dollar by UUP, or if you want an inverse fund, it's UDN, I believe. Let me verify that. I'm pretty confident it's UDN. Again, I never trade it, but is that the short one? Yeah, it must be. All right, so this would be no. The other one was the. How did they do that? Yeah, this would be the inverse dollar index, because the dollar index is going down. You see this trade's going up, so it's the inverse dollar index. I don't know why they titled it DB, but it's U down, which is the U.S. dollar is going down. So this particular trade is going to go up. It's an inverse ETF. I'm probably confusing you guys. I probably should just stop talking at this point. Inverse dollar is UDN ETF. I'm just going to stop talking. Stop talking. Stop confusing. How many of you guys want a currency class? Robert just said, talking about currencies, is there a Forex class in the plans? Yes, there is. I have so much that's going on. I've been saying for 3 years we're going to do a currency class, and we just haven't gotten around to it. How many of you guys want a Forex class? If I were to offer a Forex class, would you guys jump at it immediately? Alex says, nope, this is just perfect. All right. We're gonna get a Forex class. I don't want to promise a date, but I really want to have one before the end of the year. So how's that? Now the good news is Forex is very similar to stock. It's really, really quite similar. The biggest difference, and really the hardest thing to manage, is the leverage, because you can leverage to the hilt. You can do 50-to-1 leverage, and that's even after Chris Dodd got a hold of it and screwed it all up with the Dodd-Frank financial reform bill. It used to be we could do 400-to-1 leverage. It was incredible what we could do. So for $40, you could control $10,000. Basically, it was nuts. But anyway, all right, we're going to get a Forex class together. Tom says, I was told 80% of Forex traders lose. Well, Tom, somebody could say that about stock traders too, or options traders. Trading, you know, you can look at those statistics and you say, look, every trader is responsible for themselves. And if they don't know what they're doing, they're probably going to lose. That's just reality. But obviously, there's a lot of people that make money trading currencies, or else people wouldn't be doing it, number one. More importantly, banks and all the institutions that have to trade currencies. Now, when you look at currencies, you look at international markets, you go to a much bigger scale. The currency market trades about $4 trillion a day. That is massively larger than the U.S. stock market. One of the things I like about currency, there's only a handful to look at. There's not a whole lot that you need to keep tracking. The formations are basically the same as what we look at in the stock market. So a lot of the analysis is very, very similar. And, you know, it's just, it is what it is. There's a little bit more intermarket analysis to consider maybe. And, you know, a lot of fund managers really feel like fundamentals work better for currency markets than anything else, because you know, you don't have as much opportunity for small manipulations, if you will. I still contend, though, that you look at a currency market, you got such a huge cross-section of individuals trading it. You got amazing, amazing trader sentiment being revealed. So I really think currency is a cool market. Yeah. All right. I'll tell you what, guys. We are way over time, and I'm going to let you guys go. So it's been a great class. I hope you guys have learned a lot about candles tonight. I hope you've enjoyed your time with me. Here's your action steps again if you need them. Have a wonderful evening. Have a great weekend. Monday, when we get together, we're going to start jumping into indicators, and got some cool indicators to look at Monday night. Looking forward to sharing those with you. You guys have an awesome night, and I will see you next week. Happy trading. Good night.